Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The bullish mood returned on Friday as the Australian dollar snaps out of a two-day bear trek and now looks towards 67 cents, which nearly was reached this morning after posting an intraday high of 66.90. I still feel from a technical point the market still has potential to challenge or clear this level of 67 figure 15 and look on towards 67.65 as the dollar index, which measures the greenback strength against a basket of six major currencies, tumbled to 103.05. Investors warmed up to the US Federal Reserve Chairman Jerome Powell's comments after hinting that they may have peaked, and therefore the US Central Bank is expected to keep rates unchanged at the December meeting and may look to cut them in the first half of next year. However, Powell did push back expectations of a rate cut, that is in the first half of 2024. Still, the market is still viewing that there could be cuts in early next year. So until the figures change, that is from the CPI, all eyes do turn to the blockbuster event this week, which is the non-farm payrolls number, which is expected to see a forecast of 185,000 jobs added following the previous month of 150,000. Any pullback in the Australian dollar views support around 66.35. Turning to the euro, the market is a little bit weaker as the whipsaw price action on Friday settles around 108.50-70 area. In view of the pattern though, the market is breaking down a little and could find support soon around the area of 108.60 to around 108.15. I do feel, and I'm not likely to turn bearish as of yet, as the dollar index still has potential of falling towards the region of 100 to about 150, and therefore could actually ignite further demand and see a rise back to 110. The dollar yen remains somewhat weak and continues on to the forecast of 144.5 to 80. In light of the pattern, it is bearish, trending rather well to a bearish case, so therefore should continue on this downward trek. Looking at sterling, a little bit mixed to the start of this week, as all eyes turn to the Bank of England Governor Andrew Bailey again after saying last week that it will do whatever it takes to get inflation down to 2%, adding that he has not yet seen enough progress towards that goal to be confident of even talking about rate cuts. Gold very whipsawed this morning after stabbing a high of 2,140 and backed away very sharply of 60 points. Although the bulls are still determined to see this market challenge the top side as we go into uncharted territory. And now for myself, I have a neutral view considering that we've broken the 3-year highs around 2060-65. Wrapping up with oil, the market still seems somewhat bearish after breaking out of this pattern and the whipsaw price action stabbing the top side highs around $79 a barrel, and now looks towards its key point, seen around $73.50. I feel the market may respond to a bullish return there and then see a rebound around $76 to $77 a barrel. Well, that's a wrap for the start of this week. Thank you very much for joining me. As always, look out for the intro report. I hope you enjoy the rest of the day.